All right. Hello, everybody. Welcome to the live stream. My name is Kyle. Here is Dan Frio. We are both licensed loan officers in all 50 states with ServBank. And so what we're going to do on this stream is we're going to answer any questions you have about buying or refinancing. So just leave those in the chat and we'll bring them up. We'd also love to know where you're looking to buy. We already have Angel here in Hershey, Pennsylvania. Brooke is here as well, along with TikTok compilations. So we'll get to your questions here in a second. We're going to cover what's going on in the markets, and then we're going to talk about refinances and particularly how a lot of lenders try to rip people off with refinances. So before we get into that, Dan, do you want to give us an idea of what's going on in the market?
Sure. So if you guys aren't a viewer of my channel, you're probably thinking, what in the world just happened last Friday and then this coming Monday when the stock market and everything just imploded? So last week what we had is the Federal Reserve came out on Wednesday and didn't do anything. They said the jobs numbers, they're okay. The economy still seems to be growing at a good clip because we have the GDP up 2.5%. So they're like, we're going to be cutting because inflation's coming down. But then on Friday, a jobs number came in and it was really, really bad. So the markets just kind of imploded from there, thinking, okay, the economy's running into a recession, what's going to happen? And then Monday came around and all the markets just got crushed. It had nothing really to do with our economy or anything. It was what happened was called a carry trade. And if you don't understand that, the best way to do that is just Google it. It's CAREY trade. It's when one currency in the world is really cheap, so people will buy that currency and then buy stocks with it and so forth. So it was an unwind of that, and it was catastrophic all over the world. Japan, Taiwan, most markets throughout the world dropped about 10%. So here in the US, we saw that dip and then we came right back. But then it triggered all the mainstream media and everybody to say, is the Federal Reserve behind the curve at this point? So then what you saw is mortgage rates just plummet because of this. And there's not that huge of a change from where we were last week till now. But the odd thing is yeah, the economy's slowing down and everything, but all of a sudden the CME, I watched the CME FedWatch tool, and what that does is it kind of tells us or gives us a forecast of what the Federal Reserve is going to do. Well, the federal funds rate right now is it's 5.25 to 5.5 is the spread on the federal funds rate. There's a spread there. The actual rate is like 5.33. So that's the rate the Federal Reserve controls. Well, if you look on the screen right now, remember I said that the federal rate right now is 5.25 to 5.5. It doesn't even show up on the chart anymore. Well, yesterday was kind of weird because even the 5% to the 5.25% rate was off the chart, meaning everybody's expecting now the Federal Reserve to cut from 5.25 down to 4.75. That's a 50 basis point cut. And you're seeing right on the screen the probabilities of that going to happen. So there's over a 50% chance the Federal Reserve is now going to cut 50 basis points, which is 0.5%. So that just put ripples through the whole economy, and mortgage rates plummeted or continued to plummet because the forecast is lower rates ahead. So that's what you're seeing right now in most of the markets. So again, what happened Monday wasn't a US thing. It was basically a worldwide thing that kind of got fed into by Japan. But right now what we're seeing is there was some numbers that just came up on my chart today, which these are things that you guys don't have access to or see. You probably have access to it. But what I want to show you right now, hold on one second. There was consumer debt numbers came out today. The last reading was there was $11.3 billion in consumer credit outstanding. Everybody expected it to drop to about $10 billion because people are trying to get out of debt, pay off those high interest rate credit cards. It actually came in at $8.9 billion. So that's $2.5 billion or a little over $2 billion in reductions on people's credit. So people are paying down debt. They see rates are going up, and they have the ability. They have money in the sidelines because you saw, when they're taking the money out of the stock market, they're using that money to pay off debts at this time because they're like, okay, the stock market, I'm not going to get 25% returns on it anymore. I'm going to suck my money out of there and pay off these credit cards and all this other debt that I have. So that's what you're starting to see right now. So it's a great opportunity to look into, because back in October, I just got an alert this morning. We had about $6 million worth of borrowers that when I came in this morning, my alerts all went off. These people can refinance right now at a 1% lower than where they currently are. And some of these loans are $500,000, $600,000, $700,000. I just did an analysis on one. The person could save $490 a month. So the question is now the time to do it? So it might depend on your situation, where you live, and maybe some of the questions that you guys asked today. And that's why we're here.
So what would you suggest for people who are kind of in the spot where I think generally you talk about the rule of thumb is like 1% lower is probably a good point to start looking at a refinance, or at least the possibility of it. But as we're expecting rates to continue to go lower, I think a lot of people try to do I'm going to time the market to get all the way to the bottom. And what do you suggest for those people who are in that spot where it's, we never know exactly when the bottom is going to be. So what do you think are some good signals for people to look at, or when they're waiting on the sidelines, when a refinance would be a good decision?
Great question. And I posted a video last night. So if you're on my channel, if you guys aren't on my channel, go to my channel and watch the video I did last night. And I don't know if you know, but ServBank, Kyle and I work at ServBank. We're the number 10 sub-servicer in the whole country. What happened yesterday is Mr. Cooper, there was a survey or a interview with CNBC with the CEO of Mr. Cooper. Now they're the number 1 sub-servicer in the country. Okay. And he was talking about refinancing and things. And that exact question came up. So here, I'll give you my take on it. And I have about 6 people already today that's reached out to me for refinances. So here's what I look at, and here's what I would propose to you. If you're reaching out to us to look into a refinance, the biggest thing we need to know is where you live and the loan amount, because the biggest cost you're going to incur, like when you bought that house, it was probably a royal pain in the ass to get your loan. You had to give all your pay stubs and bank statements for 10 years and all this other stuff. When you go to refinance, it's pretty easy. Okay. All we really need is your pay stubs and maybe a bank statement if you have to come to closing with any money. Most people don't. Okay. So here's the way I look at it. I want to know what my fees are to refinance, because in Illinois, I just did you and I talked a little earlier this morning when we were talking about title fees. If you're in Illinois, our title company right now has a $775 title refinance cost. If you go back to your closing statement when you bought your house, you probably won't be surprised if you see that number being $5,000, $6,000, maybe even $7,000 for title. I won't go over what title is, but when you refinance, it's normally a fraction of the cost. Like I said, if you're in Illinois, reach out to us. We'd love to help you. We actually work all over the country because, again, Kyle and I work at ServBank. It's the number 10 servicer in the country. We're a federal bank as well, so we're licensed all over the country. Plus, we're also a big brokerage firm, which most banks aren't. There's only like 2 or 3 banks in the whole country that also have the brokering platform, and we have that. So to answer the question is, how much would it cost you to refinance? Like me, I refinanced me and my son back in 2020, I think it was, 2 times in 1 year, because our title fees were like $700. Okay. So if you need title, you're probably going to look at like $1,200 in title fees, and you might need an appraisal that might be $500 or $600. So you could probably refinance for $2,000 or less. Some states you're going to be able to refinance for $1,000 or less. So that gets to the point where, okay, if I refinance now and I can save $200, $300, and then if rates drop again, 6 months from now, can I refinance again? Do the break-even point. But if the closing costs, some states, the closing costs are really expensive. I would sit on the sidelines a little bit and monitor this, because, how much is your savings going to be? If it's going to be $100 and your fees are going to be $2,000, I probably wouldn't do it. But if I'm saving $400 a month and my title fees are $1,500, shit, I'm going to do it. So that's my take on it, on how, what, when, and where to do that. But great question. That's what everybody's waiting for. They're like, when do I pull the trigger? And it's a tough one.
And I think for a lot of people too, they don't realize that when you buy a new home and when you do a refinance, there's always at least 1 month from the time of closing that you don't make a payment. So it's at least 1 month. Sometimes it can go almost up to 2 months where you don't have to make a monthly payment. So like Dan mentioned, if your closing costs on the refinance are $2,000 to close on the refinance, but you're saving or your monthly payment before was $2,000. Well, you're skipping a monthly payment. So effectively your closing costs were like that monthly payment. So it wasn't like you paid $2,000 in addition to your monthly payment. It kind of, if it's structured the right way, it can almost be like you skipped a mortgage payment, but you ended up paying it in closing costs. So it kind of evens out to be equal to each other. Let's take a couple questions in here. TikTok compilation says, I have a 6% mortgage rate currently. At what point does it make sense to refinance? I'm planning on owning a home for the long term, whether I live in it or rent it out. Conventional mortgage currently.
And Kyle brought it up a little bit ago. There's been this old rule of you have to save 1% on your rate before you refinance. Well, I was talking to a friend of mine yesterday, and he's got a really big loan. He's got like $1 million loan. Okay. So I'm like, you don't have to have a full percent rate cut to save money. So we just did. I'm like, if you save if we can cut you 0.5%, in his case, he was saving like $900 a month. So that in that case, I would probably pull the trigger, because even if my fees are $2,000, I'm going to recoup that probably in a payment, like Kyle was saying. But in TikTok's situation, I don't know the loan amount. I did a review earlier today on somebody that we did a loan last year. They bought a house and the loan amount's $100,000. Well, we dropped their rate by 75 basis points. They save like $50. So I wouldn't refinance in that case, even though, even if that case, the rate dropped 1 full percent, and maybe they're only saving $50 at that point, I still wouldn't do it. So you can see how the 1% rule, sometimes makes sense. Sometimes it doesn't. But if the bigger your loan amount, the lower the spread has to be for you to save money. And then, again, what are the costs involved? And that's what, that's a big thing to do when you're refinancing.
Yeah.
So great question.
Brooke said, what rates are you seeing on construction loans in Ohio? We don't currently do construction loans, but Dan, do you have an idea of where
when some of the loans that we do, like we do FHA 203K loans. The 203K loans are usually priced about 0.75% higher than a normal FHA loan. So on the conventional constructions, unfortunately, I don't know, but it most likely is going to be a little bit higher rate than you're getting in the market right now. So watch also too, are you getting a one close construction loan? Okay, so some companies have where you close one time and you're done. Others, you're going to get a construction loan, then the house is going to be built, and then at the end of that, you need what's called an end loan. And that's why I said the end of that. So at the end, once the construction is done, you'll pay off the construction loan with a new loan. So is it a construction loan you're going to get, or is it kind of the end loan, or is it a one-time close? Those are questions. That's why we have these videos, because there's a lot of uncertainty just, in that. What's the rate on a construction loan? Well, it could be multiples. So not trying to avoid your question, but if you want to just, pipe in some information, I might be able to kind of pinpoint you a little bit.
We have Graphic in Atlanta, Will's in Lancaster, Pennsylvania. Amanda says, why is a refinance better than a recast? I wouldn't say one is better or worse than the other. They're just two different tools. So a recast is more, I would say, much more on the uncommon side. Basically what happens with a recast is it's where you make one lump sum payment. So let's say you had $50,000 that you got from somewhere and you wanted to apply that to your mortgage. Well, you could apply it to your mortgage regularly and make the same monthly payments that you have been doing. And that effectively is going to help you pay off your mortgage quicker because you have a lower balance and you are making those higher payments. But a recast allows you to basically change the loan amount, which then lowers your monthly payment based on that lump sum that you're paying. So with a recast, the main goal there is to lower your monthly payment by having a lump sum of cash that you apply to the mortgage. Nothing else with a recast can change. The term can't change on a recast. The interest rate can't change on a recast. A refinance, on the other hand, allows the interest rate to be lowered, the term of the mortgage to be changed, and you can also still apply a lump sum in the refinance as well. So a refinance basically allows you to do a ton of things, but a recast only allows you to do pretty much one thing, which is then lower the monthly payment based on that lump sum. The reason why someone might do a recast is because or compared to a refinance is a recast usually is only a couple $100, and that process is a lot quicker because it doesn't require the underwriting process that a refinance might, versus a refinance. It does have closing cost with it that's more expensive than a recast. But basically, if the rate is going to lower, or if market rates are lower than your current rate now, you want to refinance. If you want to change the term, you'll want to do a refinance. The recast will only lower the monthly payment based on your new loan balance. Okay, Angel said, I have a 7.375% rate, looking to refi if rates hit 5%. Any idea how to get a quote for the cost, like title and other costs, if I have a conventional loan?
You can put our little ad up here in a second. If you want to get pre-qualified or you want to reach out to us for a consultation,
This one?
pop there. There it is. That's how you reach us.
You just say it and it
before we go
appears.
on, explain what we do, because a lot of people think we come on here and just help, give advice on, when you're getting a mortgage or buying a house or whatever. So Kyle's going to let you know exactly what we do for a living.
Yeah, I mean, we're both federally licensed loan officers, and our team is licensed in all 50 states. So we do mortgages. That's why we talk about mortgages a lot. And so we'd be happy to be able to help you with yours. And so if you are looking for a quote, we could give you an idea of averages, but the quotes are really going to be dependent on the location, the size of the home, the loan amount, and we want to get you an accurate quote. So the best way to do that is to schedule a call with us at winthehouseyoulove.com. Just click Get Pre-Qualified, and you can schedule a call, and we would be happy to help you out with a quote. If you're looking for a refinance or even just a purchase, or you just have questions about loans, which one's right for you, we would be happy to help you out with that there.
Cool. But Angel, we do this. So Angel just popped in a comment that we helped them buy last year. So we have a system that's going to monitor this for you. So some of it, if you've used us in the past, you might get auto triggers to just say, hey, your rate hit 0.5% lower than where you are currently. Would you like to look at the numbers? And then you might get one when you hit 1%, so forth. So we're monitoring this behind the scenes for you. But when, if you want to look into some things, reach out to us. I'd love to help, because we already have all your data. We would just have to basically get your title updated and, maybe get a few other things from you and get the ball rolling. But I think if you're waiting for 5%, you might be waiting a while.
Love for Puppy said, hi, when you look up the average refinance rates at different banks, are those also based on 25% equity? No, the 25% equity is usually just, what is that? Is that Mortgage News Daily that runs off of that? If you're looking at average refinance rates on any website, just look for disclaimers. All websites have to put in a disclaimer of how that data, or how rates are being portrayed. So they have to tell you what the down payment is, what the terms of the loan are. Otherwise, it's illegal. So they have to say what is making up that rate. So just look for disclaimers in there, and it will show you what that's based off of.
There was a question in here, and this was your point. And Kyle and I spoke right before we went live. Actually, we speak every day, but there was one from Geo or something like that saying, his lender's coming back saying that they can get him $599, and don't worry about all the fees and everything.
One?
We got you covered. You don't need to get any money.
Let's see this one.
The Geo one, yeah. This is the epitome. I think, Kyle, this is the reason why you wanted to do today's live, is exactly this. Okay, so what you'll start seeing is, you're gonna have your lender, especially if the lender is, you went through them the first time or whatever, they're gonna send you a quote back, and it's gonna be like, oh yeah, let's go. It's, hey, we can do this, but what they're gonna avoid to tell you when you start asking them questions about the fees, and don't worry, it's all in there. It's all in there. We're gonna save you a bunch of money. You need to know what the fees are. Okay. That's what a lot of people are doing, the same thing with purchases. When we get loan estimates every day, and people are like, hey, Dan, look at this rate. You're at 6.25. I'm just making up numbers. You're at 6.25 and they're at 5.99. They're killing you. And then you go through and it's like, well, their fees are $8,000 for that rate. So a lot of companies, what they're going to do is they're going to come out and say, I get you 5.99. Don't worry about it. No money out of your pocket. Now that's what they're going to tell you. No money out of your pocket, but there will be fees. I can almost assure you. So please, when you start getting these things, here's an analogy I can make for you. And I was actually quoted in Yahoo Finance a couple years ago. And it was my name in there and everything. Here's what a lot of people will come back and here's, you'll get my example. I go, on my way home last night, I stopped and got gas, and my gas was 99 cents. There's no way my gas is 99 cents. So when people come back and say, hey, Dan, I'm getting this rate at $5.99 and there's no fees and nothing, the rate doesn't exist, folks, on a 30-year fixed. Okay, so what's happening, how I got that 99-cent gas? Well, I had to buy 3 cases of beer, 2 cartons of cigarettes, and 5 Red Bulls, and I got a 99-cent gas. Oh, and I had to get a car wash. Do you get what I'm saying? It's like, they're getting me all the other places. The 99 cents stands out, but my end up costs are more than I would have paid for the gas anyways. So you please be careful. The keywords you're going to see is no money out of your pocket. Well, that doesn't mean they're not adding a ton of charges in there for you. So I want to bring that up because that was one of the main points that Kyle wanted to get in today. And that question was perfect.
Yeah. Let's see. Let's just talk about the free refi thing. Very rarely have I seen a lender actually not charge for a refinance. And keep in mind, even though the lender is not charging, there are still other closing costs that you're still going to have with a refinance. For instance, most people are still going to have to set up a new escrow account. So that's going to be included as a cost. You're going to have title costs as well. And even though those aren't things that the lender charges, but it's disingenuous for them to say it's free or there's no cost to you. Because like Dan mentioned, it's usually no cost out of your pocket. Doesn't mean there's no cost to you. So what happens a lot of times is a lot of lenders will say, we can do a free refinance for you. But usually what ends up happening is to cover all those closing costs is they raise the loan amount so that there's no cost out of your pocket. But basically all the equity that you've been paying down into your mortgage now starts to get absorbed by those closing costs because the loan amount increased. Now, that's not bad. That's what a lot of people do on a refinance is they'll have their loan amount increased a little bit to cover those closing costs if they're there. But it's just disingenuous when lenders will say, we'll do it for free, when in reality, it's not for free. It's just, it was baked into the loan amount. And this is this is a little bit of what was happening in the NAR lawsuit with real estate agents, is a lot of real estate agents used to go around and say, we'll give you working with me, it's free as a real estate agent. Well, that's not true. The seller is paying for it. And so effectively your agent's commission is baked into the purchase price. And so the judge was saying, you can't say that you work for free anymore because that's not true. You're misleading borrowers. And so a lot of loan officers, unfortunately, do this. We'll do a free refinance for you when even if the lender themselves aren't charging you any costs, like an underwriting fee or anything like that, you still have title costs. You may still have recording fees. And then you also likely are going to have an escrow account that has to be set up again. So a free refi isn't always, it often is just a marketing term that isn't the full story there. Let's go through a couple questions before we jump through the rest of that. Mayor, okay, you had a question about, yes, you can just apply a chunk of money to your mortgage. You don't have to refinance or recast. At any time you can do that. So the best way is just through like in your online portal. They should have an option to apply an extra amount. And if you send in like a check, if you pay in checks, then you need to talk with your lender first to make sure that it goes towards the principal balance and not the interest on the loan. That way you're not prepaying interest. So, but the online portal is usually the easiest for paying that down. Chronica said, hey there from California, currently on a 6% FHA loan. My loan officer texted me a couple days ago, told me we can go down to a 5.25 and save $1,800 a year if we refinance. And then, although today my loan officer said the rates bounce back, so we have to wait for a bit.
Rates moved a little bit, not a ton. If you can go back to the other one, please. If you could send us your information, we'd love to give you a quote. And that's what we do for a living. So if they can get you a 5.25, I'd like to validate that. Kyle, can you pull up what are today's rates on Mortgage News Daily? Are they even near 5.25?
Let me pull that up here. Give me just a second here.
FHA 30 years 6.15. So that's an example where I was saying is, I mean, there it is on the screen. So to get, what was the rate? 5.25? I don't know if it's a 30-year term or not, but it just seems too good to be true. I'll put it that way. I mean, you're almost 1 full percent lower than this is the national average. So just saying.
So something we
You're going to
could
get
talk about with refis too is this what I imagine is likely happening in this scenario is what's called point stuffing. So this also has been happening on purchases as well, although it's hard to hide on purchases because you're paying all that money up front when you buy a home. But with a refinance, since your closing costs can be absorbed into your loan amount in most circumstances, what often we're kind of seeing happening is people they do the combination of this kind of a bait and switch with point stuffing. So a lender might reach out to you and say, I can get you this super low rate. And that's all you hear. And you think, of course, I want to refinance my 7% loan into a 5.25%. That sounds like the best deal possible. Let's do it. But then when you end up seeing those documents, either you see it at that lower rate, but usually what ends up happening is you're paying points for that. And points are, I like to think of like upfront interest. Basically, you can choose any interest rate that you want. It's just that those rates that you choose might come with a cost or a credit. So a lender may offer you, one specific rate here. Let's say it's 6.5%. Well, you could actually get a 6.25%, but it might cost you $2,000 up front to get that interest rate. So over time, the goal is to save enough monthly in interest that you break even on that $2,000 up front. But what's happening, we're seeing even again with purchases, is loan officers are just immediately adding points, assuming that you want to pay all this money to lower the rate. And especially it's a little insidious on the refinances because all this time that you've been paying down equity on your loan, they're just going to tack on extra cost into it to give you a lower rate to seem like they're giving you a good deal. And then since, like the other person mentioned, well, it's zero out of pocket. Yeah, but you might have paid $5,000 extra in your loan amount. You've been paying down your mortgage for years. All that progress is wiped away just because a lender was trying to give you something that seemed interesting when in reality you were the one paying for it, just included in your loan amount. So that's happening in a lot of circumstances. And even if you go to, let me pull up, I can pull up an example here. A lot of lenders too, even on the rates that they show on their websites, are still including points. A good example of this is if we take a look at Rocket Mortgage's rates. So they're going to show you this 6.75%. And what most people are going to do is they're going to come over here and think, oh, 6.75. Well, my lender said that I could only get a 7.25%. Well, they're putting in here 2 points. And if you're not aware of what that means you're paying $5,500 to get a 6.75% rate. And so most people aren't comparing apples to apples when they look at lenders. They're only looking at, well, my lender told me I could only get a 7.25 and Rocket's giving me a 6.75. So I'm going to go with them. Well, if you actually asked your current lender, can you show me your rate with 2 points? Well, odds are your lender is going to be able to offer you a lower rate. So there's a little bit of deception that happens in marketing on the purchase side and even on the refinance side too, where it's a little bit easier to hide that because people hear zero out of pocket, here's your low rate, and people don't ask questions after that, unfortunately. Angel said, if I refinance at 5%, I will save $320 a month. Is the title cost the same for purchasing and refinancing?
No. And that's what we covered just a little bit ago. You might not have been on yet, but when you're refinancing, and I don't know for fact every state and everything, but when you refinance, it is much, much lower than you're purchasing. Like for example, and the best example I can give you is because I'm in Chicago. If you bought a house, depending on the amount of house you're buying, you're probably going to pay $5,000, $6,000, $7,000 in title. Refinance, and I actually just sent all this information to Kyle this morning. We ran a title fee chart for a property that we were looking to refinance. It was $775. So it's a fraction of what it is when you're refinancing versus when you're buying in almost all cases.
Someone had a question too related to that about should they shop around for a title company and how do they do that? When it comes to a refinance, I'll say with purchases, most title companies are pretty much within the ballpark of each other. There aren't a lot of huge cost differences in title companies that I've seen. Usually the differences in title companies are more about their service rather than their costs. When it comes to refinances, you absolutely can shop around for title companies. However, your lender is probably going to know which title companies offer discounted refinance fees, which, like Dan was mentioning, because you could choose one on your own. Like, right, I could go to a local title company here with all the people that I know, and get, they would probably charge double the amount in title fees versus if we went through a title company that's more specialized in refinances that offers them for a cheaper amount. So usually your lender is going to be able to provide a title company that's going to be the cheapest possible. Dan R said, refinance anything less than 1% isn't worth it. Is that true? No. You already covered this a little bit, Dan.
Yeah. So basically, it depends on your loan amount. And the easiest, just think of it in the math. If you had $1 million loan, a 0.5% reduction in your rate would save you a ton of money. If you had an $80,000 mortgage, a 1% reduction in your payment probably wouldn't do that much. So you have to figure out what's my savings, what's my costs, what's my break-even point. And then from there, if you like those numbers, go with it. There's no set thing in stone saying, okay, this is the perfect refinance scenario. It's up to you, you to choose that and, pick those spots.
Yeah. Pavan said, can we know more about the FHA refi? Also, why are FHA rates lower than conventional? I can answer the second question if you want to take the first, Dan.
Yeah,
go ahead.
Okay. So if you have, and this should be an alert. I don't have a button for that. You have the crystal ball. I don't want the crystal ball. I know. So if you have a VA, a USDA, or an FHA loan, it's simple. It's really simple to refinance. Okay, so let me tell you what the thought process is, and then what you need to do, or what we can do for you to do it. So the thought process is on those government-sponsored loans, what we do is we have to pull a mortgage-only credit report, and your credit score has to be high enough to qualify for this specific program you're getting into. Then from there, here's how they look at it. The lenders look at it saying, okay, you've made, well, the reason why you're refinancing is bringing down your rate in your payment. Okay, so most likely both. So what they're saying is, well, you've been able to pay us all this time that you had the mortgage on time. And so now all we're going to do is reduce your rate and reduce your payment. So there shouldn't be any reason why we have to requalify you. So that's basically their thought behind it. So we have to pull a mortgage only credit report. You can't have any lates in the last, well, you can have one late in the last year, but it has to be over 6 months ago. So basically, if you have FHA, VA, and USDA, you can refinance it simple, no appraisal, no income, basically a mortgage-only credit report, and we're not even going to ask you for bank statements or anything else, maybe bank statements. And that's it. So we'll facilitate the paperwork for you to just redo you at a lower rate. And then somebody had a question, do you have to go back to like a 30-year term or whatever? No, most of the time, most lenders will customize it to basically the only, the term that you have now. They'll go on these streamlines, they'll go equal to or greater than the term that you have remaining. So again, if you have one of those types of loans, it's crazy easy to refinance. So you take over.
And just in general, why are FHA rates lower than conventional? It's actually true for pretty much all government loans. So FHA, VA, and USDA are all government-backed loans. And the reason why those rates are lower is because they're backed by the government effectively. They're lower risk because they basically have their own built-in mortgage insurance of sorts. So for instance, like FHA is fully self-sufficient from the government, so they don't get like any sort of additional funding from the government. They fund everything through the mortgage insurance that FHA gets. And actually, HUD is like loaded with cash because of the mortgage insurance premiums that they have. So that's why they just offer a lower rate. Conventional has to mitigate that risk with a higher interest rate and then also separate mortgage insurance called PMI. So FHA just is lower risk for lenders, which is why they can offer lower rates.
And also,
Um,
let me piggyback off that real quick.
sure.
When you're doing an FHA loan, now this is different with VA and USDA, but when you're getting an FHA loan, no matter what, they're going to charge you a fee. In most cases, it's 1.75% of the loan amount. Of the loan amount is an upfront cost to you, and then you have a monthly MI fee to pay each month. And it depends on how much money you put down initially when you bought the house, because you could have mortgage insurance on there for all 30 years that you have a mortgage. So HUD or FHA, they're taking in all this money to basically ensure to the lenders, basically exempt them from losing money if the house got foreclosed on. Sorry about that.
Oh, no, you're good. Rakesh said jumbo loan rates today are higher than conforming rates. It was the opposite 1 to 2 years ago. What are the factors contributing to this, and do you see it changing in the future?
I hate to say it this way. I don't really monitor jumbo rates hugely. If that's a good word. Unfortunately, we don't do a lot of jumbos. Was there any LLPAs that changed over the last year or so in regards to jumbos? Not that I know of.
That changed? Not that I can think of. The only thing I can think of inside of that is with all every mortgage, there's different risk tolerances at different levels. Even at smaller loan amounts and like conforming mortgages, there's different risk tolerances that investors on the secondary market have for these types of loans. So, what's kind of weird is sometimes lower loan amounts can have higher interest rates than something like an $80,000 loan might have a higher interest rate than a $300,000 loan, and it just is based on the risk tolerance of the secondary investor or the secondary market. So that's the only thing I can assume in that. But again, we don't track the jumbo side too much. There's nothing on the LLPAs that I can think of that changed, except for maybe like high balance LLPAs. But off the top of my head, I can't remember if those have changed because there's been so many changes to the LLPAs recently. Amanda said,
"Hey, Amanda's back."
Hey guys, pros and cons of staying with the same lender versus going with new. As far as with a refinance, staying with the same lenders, often they'll have some of your information already, which makes things easy. However, it's not hard to give that to a new lender. It doesn't, 5-10 minutes tops. Filling out a new application, it's really not that hard. So there are some lenders who offer incentives with staying with a refinance with them, although it's kind of few and far between. I haven't really seen a lot of that. So other than that, there isn't like huge benefit of staying with a lender versus going with a different one. Oh, I did answer this question that Angel had. Let's see. We answered this one. Dan, you want to give us a quick overview of the VA Earl?
It's crazy simple. Okay, so I just got an alert today with multiple people that we closed last year, giving them updates on, if they were looking to refinance. So here's what the Earl does. So you have a VA loan. So how do you refinance it? Just call us. As long as your credit score is high enough to qualify and you have no late pays on the VA loan, you should be able to refinance. That's basically it. You don't need to validate your income again. We're not going to ask you for pay stubs, W-2s, anything of that sort. You don't need an appraisal. So you don't need, just think about it when you bought your home. What was the biggest pain in the butt? You had to get all these financials together, your last 2-3 years tax returns, W-2s, pay stubs, bank statements, every page of that bank statement, everything. Nowadays, now it's like if you got a FHA, VA, or USDA loan, reach out to us. We would love to help you because there's nothing involved. It's basically going to be, you put in an application, we run the mortgage only credit report, you're good to go. We quote you the loan or all the numbers and so forth. You give us a thumbs up. We create the paperwork and you probably close within 2 weeks. And like Kyle said, you might want to time this right because a lot of people do this in like December and stuff because it's the holidays and they want to skip a payment too. So think about that, the time of year that you could benefit from skipping a payment, but don't do it just because of that. You want to do it when it's prudent for you, you're saving money and it's a long-term thing, not just say, hey, I want to skip a month, payment in December, so I'll do it in November. No, because you're going to think 20 years back, down the road, you're going to think back saying, why the hell did I do that? So make it make sense. but they're simple
Uh,
to do.
Jade, thanks for the super chat. You said, what's the best way to go about generating 10K profit with a multifamily? Is that per month, per year? I have, or just selling it. I have one triplex with a 3.5 interest on a 30-year FHA with 28,000 in equity. I would not get rid of that. Do not get rid of that loan at a 3.5% interest rate is fantastic. I want more. Should I just keep taking out $100,000 to $200,000 loans and build debt? Really, there's only, as far as with like real estate investing. I'm gonna try to see if you had any clarification on that. It's going to be difficult to get $10,000 in profit from one. You're just going to have to start building a portfolio there. What you may want to look at is when you're using things like FHA loans, you can't use them for an investment property. So I'm assuming that you lived in that multifamily for 1 year and then moved out to rent out all three of those units to generate profit. So that's definitely an option. You could continue doing the same thing with residential loans if you wanted to. It's going to be difficult to get another FHA loan. There are circumstances in which you can, but having two multifamily, especially with FHA, can start to get a little bit tricky. Underwriters have some scrutiny there because they don't want it to be used as an investment loan. So you could do it with a conventional loan. You can now do 5% down on a multifamily 2 to 4 unit with conventional. Do the same thing, live in one unit for a year, rent out the rest, and then move out after a year and then rent out that unit that you were in. But what you could do, what may be a little bit easier, is if you're willing to take on larger down payments, so around 15 to 20%, you could look at something like a DSCR loan. So DSCR loans are nice because you don't have to go through all the income underwriting issues that you would have to go through on a standard residential loan. So DSCR loans are closer to commercial loans than like a primary mortgage. And there are options too where you can get money to be able to fix up those homes and then convert them into a long-term loan if you wanted to. So Dan, do you have any other thoughts to add in there?
No, I mean that's basically unfortunately you're just going to have to take on the debt until you have the cash, and then just I would try to accelerate those payments if you can and try to get those places paid down as fast as you can. Then you just by the time you look pretty young, by the time you're my age, you have all those paid off and you just have that rental income coming in. That'd be awesome.
Yeah. The only thing I guess I would consider as you're building out that portfolio is just maybe keeping in mind your reserve fund that you have. So I hope that you have an emergency fund for yourself personally, your own 3 to 6 months of expenses in there. But it also would probably be wise as you're building up a portfolio to start looking at an emergency fund for each of those properties. So, as a multifamily, you might run into some increased vacancies. It depends on your area too. You may want to look at 3 to 6 months of an emergency fund for every property you're looking at. That way, if you do have vacancies or you have repairs that are needed, those aren't going to put any strain on your personal finances, and you have this little nest egg to protect each one of those properties. Okay, so you said per month, $10,000 per month in rental income. I think at the beginning is going to be tough. It's like Dan mentioned, as time goes on and you're able to pay those down, then it's going to increase your cash flow a ton. But I think for a lot of investors, the cash flow is really tight in the beginning because you're building that portfolio. You need equity to grow. You're paying down the balance of the loan. But over time, it's much more of a longer cash flow play than getting a lot of cash flow in the beginning. Let's see. Oh, I'm sorry. I skipped your question, Brian. How I managed to close in June at 5875 with no points and 5% cash to close is beyond me in Southern California. Wow. We hope to get back to the threes. Man, I hate to burst the bubble here, but I don't think we're going to be at threes for a long, long time. Threes were an exceptional,
yeah, I hope we're
exceptional
not,
period.
Something's really wrong.
Yeah, we got to threes because we had a global pandemic and no one knew what to do about it. So we probably won't get back to that. And the Fed was purchasing billions of dollars in mortgage-backed securities to lower the rates. We won't be back there unless something like that happens again. I have a 7.25% on my loan, but I have a free zero-cost refinance through my original loan company. Should I have refinance now or wait? Is it good for 3 years? I also have $200,000 left on my loan.
Here's what I would do, and this is going to sound like I'm self-promoting my channel, but watch my channel on a daily basis. I come out every morning by 10 a.m. and I tell you kind of where rates are, what direction they're going to take, and where to go from there. And then once you kind of see, you're never going to pick the bottom. You're never going to pick the bottom. But when it gets to the point where we do start to taper into the fives, I would jump on it. I would jump on it all day long. Even if we go trickle down in and that's why we ask a lot of people is like, go ahead and put your application in. Let us monitor rates for you. Like just the other day, rates went down, like 0.5% in 2 days. And now like the one person just commented, their broker just called them back, said, rates pop back up. So it's like the market, if you bought in the stocks, Tuesday morning, you probably made some money. I don't know what the market's doing today, but the market dropped 1,000 points on Monday, and then on Tuesday and Wednesday, both days, or Tuesday, it was up a couple hundred points, and I think today it's actually doing bad. Yeah, it's down again. There was we were talking this morning, or Kyle, we were just talking. How many billions did the Fed just issue in treasuries? Oh, the Federal Reserve issued $42 billion today in 10-year treasuries. $42 billion. That's how much, that's the national debt that we keep funding because the U.S. government has no money, guys. That's why we have a deficit. So, there was a huge bond auction today and it didn't go so well.
Does putting down a chunk of money on my mortgage, is the interest rate lower every month on my current mortgage? Yeah. So if you put a chunk of money into, or lump sum of money into your mortgage to pay it down, if you put it on the balance, then it will lower the amount of interest that you pay every single month, because you're paying interest every single month and it's recalculated every single month based on your outstanding balance. So if you pay it down this month, next month it's going to be based on the lower balance. The more you pay into that, the less interest you're going to pay.
I can't believe you took that question. And here's why I said, when somebody usually types in all upper cases or something like that, Kyle usually just skips right past you. So when I saw that, I'm like, that question will never make it. And then I look down, I'm like, you're answering the question. So good job, buddy.
Look, but Mayor's here a lot, and so I'm glad you're here. Thank you for being here. Usually, the thing that annoys me is when someone copy and pastes their question and keeps putting it in one after the other. That I'm like, okay.
When I saw all caps, I'm like, oh man, she's gonna get overlooked.
How competitive are your rates, and how do you compete with federal programs that have incentive to give people advantageous rates? Bank of America's first-time homebuyer program. So we actually do have a thing. Let me pull this up here. So if you go to our website, you can go to compare your quote. And what you can do is upload your quote in there, and then we'll show you what our rates are based on the quote that you have. And so from us doing that, I would say on average, around 70 to 80% of those quotes we beat by quite a bit. And then what sometimes happens is we'll show people our rates, and then their lender will come back and be like, oh, okay, well, we'll reduce our rates now. And it really is, it's kind of shitty that a lot of these lenders are like, they're basically charging you more to try to see if they can get away with it. And then they'll reduce their rates once they realize like, oh my God, we're going to lose your business. So we'll drop our rates down. So I would say the ones that we aren't competitive on, and really no lenders are competitive on, are a builder's in-house lender, because they kind of work together to be able to provide incentives that it's just difficult for any other lender to compare with. But with any others, we are kind of just smoking people on the services and rates that we can offer. And then as far as programs, we do have, were you going to lead me into the grant thing? Is that what you're talking about?
Yeah, but I mean, how competitive our rates are. Somebody just asked this question as well. So I'll explain to you who and what we are. So Kyle and I work at ServBank, and you can see it right through over here. ServBank is one of the top 10 mortgage servicers in the country. So they collect your payments and everything else. What we do with them is we're federal loan officers. So we're licensed throughout the whole country, and we offer products. But we all are that came out wrong. We are also a big mortgage brokerage. So we're set up with just shy of 50 different lenders right now. So here's what we do behind the scenes. We take your data and we plug it into this system, and then we run it. So then it's going to scan the whole country and say, okay, here's the best rate in town. So if it's not ServBank, it's some other XYZ bank or whatever, we can use them. We can use their programs and their rates. So that's what we try to explain to everybody. If most of the times when people are putting in their application, they're like, now, are you going to run a hard credit pool? Because, I applied to 5 other places and I don't want another hard credit pool. Well, why are you going to 5 places? Well, you're going there to get, competitive rates. We can do that for you. So let us take the hard lifting out of that equation for you, because it's like you calling 50 different companies and getting quotes, but you're going to have 50 applications, 50 credit reports pulled, and all that other stuff. So that's what we do. Being that we're also a federal bank, we do have grant money in the Chicagoland area to lend. And we have actually $10,000 per closing to be able to provide people with down payment assistance, or you can use that money to pay your closing costs. So Kyle just created a calculator or a web page that you can just go into right now and see if you're in the Chicagoland area, you might qualify for one of these programs. But we also have 3 other programs that are huge right now, and one of them gives you $6,500, and I think that's what Kyle's going to show you right now.
Yeah, we have 3 grants that go up to $7,368.
Ooh, it's going up there, buddy.
So I won't go through the whole thing because we have a lot of questions that we probably need to power through here. But you can go to the tools section and go to the grant finder, and it just asks you a couple questions. It'll take you like 2 minutes to fill out, and it can show you if you can qualify for one of the national grants we have. If you're in Illinois, I'll put Dan's email here in the chat. Just shoot Dan an email because I don't have the Illinois grant on the website yet, but Dan can get you plugged into that to see if you can qualify for the one in Illinois.
You know what I'll do today too is I'll reach out to lender homepage and have them add. If you could, I got the URL that you have, so I'll add them. Yes. If that's okay to our website. Okay, so I'll have them add that this evening.
That would be perfect. John said, if I refinance before 6 months with the same broker lender, will the commission be less? Most lenders have what's called an EPO, an early payoff. So if you refinance within 6 months, often what ends up happening is the loan officer who did the original loan usually has to pay back their commission. So it's something to, I don't know, if you can wait because you don't want that to happen to somebody, I'm sure they would really appreciate that. Okay, we probably need to power through these questions here. They're just loading up, and we're trying our best here. Mine said, "Hey, all, living in Riverview, Florida. House prices are coming down, but I not see this crash. Other YouTubers are saying, at least not in our area. Thank you both for the informative videos. Thanks for being here. We're not really seeing the crash either." And someone mentioned too, they were like, "I was told to wait on the sidelines, and I've been waiting since, what was it, 2020 or 2022, somewhere around there." And I think a lot of people have run into that. A lot of people are saying, wait for things to crash and things are going to be better. And then it just hasn't been that way. And it's
a lot
actually
of those
worse off for a lot of people.
I know, and Kyle knows. And we but after their channels got so big because they were crashers, and that was what's in vogue, and that's what gets the hits, they no longer want to talk to us. But we keep reaching out to them saying, okay, where's the crash? You said in 2020 it was going to crash, in 2021 and 2022 and 2023 and 2024. And I feel bad for those that completely sat on the sidelines listening to these guys. I feel really bad for the people that sold their homes thinking the market's going to completely just tank, and now they're renting and their rent keeps going up year after year, and they're like, why did I do that? So that's my biggest concern with a lot of these guys. And we invite them to come on our channel to say, what are we missing here other than you're making a lot of money on YouTube? But I get parts of Florida is bad. I get it, but it's not the whole country. So when they come out and say, the whole world's going to crash worse than it's ever been, where's the crash? Okay, that's all I got to say. So
for the record, I don't want to talk to them. Dan wants to talk to them. Yeah. And he can do whatever he wants.
I keep reaching out to him and nobody responds, or they call me a jerk and want to file, reports against me and all this other stuff. It's like, whatever.
Reports against you. Okay, let's dive.
Who's going to told everybody to file a CFPB complaint against me.
Oh, you got an extra 30 minutes?
Yeah.
Or do you got to head out?
No, I'm good.
Okay.
Actually, I just have one person. I don't know if she's coming, if she came on here, but I got one person to call in as soon as we're done.
Okay. Let's cover these other two things. So we covered the kind of free refis, the bait and switch rates, the point stuffing. Also, there's an issue too where lenders will send a lot of mailers, or it could be an email, but it's usually through the mail. And they try to use language that almost seems like it's from your mortgage company. They may mention your current mortgage company. So let's say you're with ABC Mortgage Company right now. That's what your current loan is through. And XYZ Mortgage Company might send you a letter saying, hey, we can help you refinance the ABC mortgage loan that you have. And it's only in like fine print that they might say that it's not from your current mortgage company. And so that's been happening a lot. And I believe there's actually a CFPB action on this recently. But it's something to be mindful of. When you get letters to refinance, most of the time that's probably not going to be the best lender to work with, because usually they end up being these like big kind of like basically like a factory. They're trying to just like pump things through, and often can rely on a bit of deception to try to get you to work with them, which usually isn't going to end up being the best mortgage company to work with if they're using those tactics to work with you. And then finally, one of the other ways that people can be deceptive in refinances is not really telling you about the term options that you have. Like Dan mentioned earlier, let's say you got a 30-year loan 5 years ago, so you have 25 years remaining. Well, if you do a refinance, you could refinance into a 30-year term, but that stretches out how long you're going to have to pay back your mortgage, and also increases your interest by quite a bit that you've been paying. And so there are loan officers out there who will basically just refinance you into a 30-year loan, because what it does is it lowers your monthly payment, right? Because your loan balance is lower now. It's stretched out even further. You took that 25 years remaining and stretched over 30 years. And so now it looks like you're getting a low monthly payment. And so I think the theme through all this is just being really cautious of what is attractive about a refinance is a low rate and a low monthly payment. But that's not the end of the story. We had to see, how did we get the low interest rate? How did we get the lower payment? Did we get the lower payment because the term got stretched even further? Well, that sounds good, but you're paying tens of thousands of dollars more in interest. Or you get a low rate and that sounds really great. Hey, that rhymed. But is it because you paid thousands of dollars in fees that were wrapped into your loan amount, which basically took away all of the contributions to paying down your mortgage over the past 5 to 10 years? Did that all go away to get this lower rate? So when you're seeing these things, especially when they stand out, if you're getting info from a company that just seems miles better than anything else, that's where some alarm bells should start going off and saying, maybe I need to understand more of the story, more of the picture. How are we getting to this lower rate? Is it because of the cost? Are we changing the term in a way that now makes it seem better, but in reality, over a long term, it's actually going to cost me more money? So there's just things to be mindful of here. Rianu Keeves said, "Is being a realtor as a side job a good idea? I already have a job and thought it'd be a good idea to have a side job." I wouldn't suggest it. Being a realtor, you kind of got to answer your phone all the time and be able to go to showings at weird hours. And unless you're really flexible with your first job, I don't think it's going to be a good strategy.
Oof. Kyle would know. His whole family's realtors.
Yeah, I would say my dad's a realtor. My mom used to be a realtor. My aunt's a realtor. My grandpa's a realtor. My brother's a realtor. My third cousin is a realtor. I don't really know her though. Too many realtors in my family. Do we get a loan estimate with a refinance? Yes, you legally do have to get a refinance or a loan estimate with a refinance with every lender you work with. Are there refi terms other than 15, 20, and 25 that are fixed? Could you refi by not extending the length?
Yep, and that's what we would highly suggest. When we do, a lot of times, I lose out a lot of times in refinances because when I get back to people with quotes, I want you to get a good deal. Okay. And what I mean by good deal is I don't want to extend your term out, because that just means you're going to pay that many more years of additional income. So when I look at, doing a refinance for somebody, I take their current balance or current term, and that's what I try to go back with. Now, depends on their financial position. If they're like, I just want the low, I don't care about interest right now. I just want the lowest payment because I'm just struggling right now. Then we can push it back to a 30-year, or maybe even, pay off some other bills. A lot of people have tons and tons. I think there's trillions of dollars of equity right now pent up in home equity. And now there's some laws and some things changing within Fannie Mae and Freddie Mac to possibly start securitizing home equity loans. And a lot of people are saying that's the worst thing ever. Well, is it really? Because, the whole goal a lot of times is we're not trying to put you in any more debt. We're trying to restructure that debt to make sense. So, what doesn't make sense is paying a 28% interest rate on a credit card. Now, how they get away with it legally, I don't know, but, those are things you have to kind of look at as well. So a lot of times what I say is, you pay payments with your dollars, so maybe sometimes, even if you have a mortgage rate right now at 5.5, and you can do a debt consolidation at 6, but pay off a ton of other, things that you have out there with higher rates, it might be a prudent decision to do that. But again, don't go back out there and run back those credit cards up, because the solution here is to get all this consolidated, drive down those debts, and hopefully you'd learned a lesson not to spend so much money. So, that's our hopes behind it. But we're here to educate and inform you.
And just to clarify on that too, with the debt consolidation, like you're mentioning, so let's say you were paying $1,000 a month on a credit card, like we see happen, I think with a lot of people, it can be in those situations. Again, like you're mentioning, let's say it's at 25% interest. Okay, well, if you took that into a mortgage, and let's say the mortgage rate is 7%, well, yeah, that technically debt is being stretched over 30 years, but you can still take the $1,000 per month that you were paying and just apply it to your mortgage, because now that's at a lower rate and you're actually going to pay it off quicker. So you can use some really quick calculators online to figure out how much longer you need to pay that off. And now that balance got wiped out, and you put yourself in a much better financial situation, because now it's at a much lower rate as you pay it off, and it's going to be quicker for you to pay it off, and you won't pay as much interest by doing that. We're not suggesting by taking debt and just shoving it over 30 years and hoping for the best.
That doesn't make any sense. Yeah. But unfortunately, what happens a lot of times is people go back out there and they redo that debt. The goal here is to realize I was spending more than I'm taking in, so I need to adjust my budget. So we'll restructure, refinance to get all that debt paid off, bringing you back in line to your budget. But then don't go back out there and keep spending like you were spending. So that's the biggest culprit that there is right now.
Okay, Graphic said a house in Atlanta, which I'm looking to put for rent. Should I do this via an LLC? Is getting landlord insurance enough to cover the liability? Will I have to do both if doing an LLC? I think this is my personal opinion. I am not a lawyer and I'm not a CPA, but I think that LLCs for single investment properties, the benefits are a little overblown. Because as far as taxes with like a single member LLC, you're not getting much tax advantage. That you can get likely the same tax advantages by it flowing through to your personal taxes. And then also as far as protection, LLCs don't provide as much protection, I think, as people think. Like you still are liable for things that happen. So maybe it's best to talk with an attorney about that. But I don't personally think an LLC is something you have to worry too much about. Do you have any additional thoughts with that there? Are you kind of in the same camp with me?
Yep. Some people do. They really, really want things in an LLC to protect them, personally or whatever. So you might want to do that. I own a couple properties and none of them are in an LLC.
Yeah, I think the hard part with an LLC is so let's say someone did sue you for something that happened. Just because you have an LLC doesn't mean you just get to be like, oh, I have an LLC, you can't touch me. There is still liability that the LLC holds. And let's say that you just weren't willing to pay that. If it went to court, what often happens with people with LLCs is they don't treat them like LLCs, especially they don't follow like their state guidelines. And so there's this thing that happens where basically someone who's suing you, they can say, hey, I can request documents to prove that you haven't been treating it like an LLC. Maybe you've been like mingling funds in a similar bank account or something like that. And they can basically pierce that LLC and now come after you personally. So if you do it, just talk with an attorney about the best ways to do it to protect yourself. Look who's here. Dylan. What's up, Dylan Bly? How are you? Jade said, I appreciate this. Dan's over there on Instagram getting his little story up.
No, somebody's texting me about their final closing numbers for this afternoon. So we got a couple closings going on here shortly, and people are like, "Hey, is the number accurate?" So I was just getting back to them.
Okay, let me go through. Gio said, "Can you go over an example fake refinance loan estimate and show us what numbers to look at?" Yeah, that's actually a really good idea. I did a loan estimate walkthrough a while ago, but I think doing one for a refi would be really smart. I know you mentioned. I put my email in the chat. You mentioned possibly sending that to us. Feel free to do that if you'd like, and we can review it. And then, of course, I'll blank out all of your info on there, so you'll be good. Rakesh said, good practice to look at APR and see how far it is off from the actual rate. Bigger the spread, the more fees you're being charged. Yes, that's true. Keep in mind that with APR, it also includes mortgage insurance. So mortgage insurance isn't necessarily a fee you're going to see on the section or page 2 of the loan estimate, except for if it's like financed into the loan amount. But just keep in mind that mortgage insurance is included in the APR cost. Many lenders like Rocket Rate is lower than the nation's average. Like we showed a little bit earlier, I think people assume that, but it's because they're adding points into the cost of the rate. And so if you actually look for, I think for a lot of lenders, especially like smaller, like local lenders like us, if you take a look at Rocket's rates versus our rates with an actual like apples to apples comparison, it tends to be that smaller, more independent companies can beat Rocket by quite a bit.
I'll just chime in on this. Yeah, go ahead. I'm sorry.
I'll say a good way to think about this is Dan and I don't have a Super Bowl commercial, and Super Bowl commercials are pretty expensive, right? So how do they pay for the Super Bowl commercial? They increase the rate. That's where they make money. So they're getting money for the Super Bowl commercial through the rate. Like marketing for mortgage companies is necessary, but you're the one that ends up paying for that marketing cost. We run a pretty low cost operation here. And the reason why we do that is so we can provide lower rates. We don't need to have huge profit margins to pay for all this marketing expense and everything, because that would then increase the rates that we would have to charge to offset that cost.
A buddy of mine's the CEO of Pep Boys, and I wanted to go to the Daytona 500 recently. And I'm like, dude, where's your car? And he's like, we ain't paying for that anymore. You know how many millions of dollars we were spending on that, and it didn't pan out to be anything.
Oh, so, I'm sure.
Yeah. I lost my train of thought of what you were just talking about on the last one. My bad. I had something to chime in, but I forget.
Oh, that's okay. Jade said, my interest is 3.5. I'm assuming it's best to just take out a loan on the equity for my down payment on the next building. Are there hidden fees to take out a HELOC? Wondering what questions I should have. I think you mentioned in your other comment that you had $20,000 in equity. That's likely not enough to pull out a HELOC. A HELOC is usually only going to go up to 80 to 90% of the loan to value ratio. So take the value of the home times, especially with it being a multifamily and it's an investment property at this point, I would say it's going to be closer to 80%. So multiply it times 0.8. And then that's going to be the total loan that you can have. So from there, you subtract your current mortgage balance, and that's what's going to be remaining for a potential for a HELOC. So from what you told me, I don't think you're going to have enough money in there for a HELOC. However, it's something that you could look at. But if you do have enough equity for it, it's a really common strategy for people to use a HELOC for the down payment on their next building. Angel said, I purchased with OnePlus grant, and I currently don't have PMI. If I refinance, will I have PMI, or can I get another Home Ready Home Possible loan? The OnePlus programs for purchases used to not have. I'm sorry I answered this question as soon as you put in the super chat for the same one. The One Plus program used to not have PMI. It does now. So you're grandfathered into it. So as long as you keep that loan, you won't have PMI. If you refinance to a new loan and you still don't have 20% equity, you will still have PMI. Home Ready and Home Possible loans, all of them have mortgage insurance. It was just for that period of like, I don't know, it was probably 4 to 6 months where One Plus was basically kind of like a special program. They were saying, hey, there's no monthly mortgage insurance, but that has gone away now. So Home Ready and Home Possible do have PMI.
Oh, I know what I was going to talk about. One of the 50 lenders we use is Rocket, and they're fantastic to deal with on our end. We deal with their wholesale department. You guys, if you call in, you deal with their retail department. Their retail rates are terrible. Their wholesale rates aren't bad, but we probably do 20 quotes a day at least. And I can honestly say when I pull up our rates between our bank and then all the other banks we have in Rocket's usually about midway down the form. So they're not always, very rarely do I find them having the best rate in the market, especially if you're working with them. I'm talking to the YouTubers out there. You're working with their retail channel. If you do with us, if you go to Rocket, I would highly suggest you call us. Because we'll be able to just smoke the rate and fees they're giving you on the retail side. And don't be surprised if we can put it back through their wholesale division at much lower rates and fees. So that's kind of how Kyle brought this up a few times in the past. We're kind of like Costco. You know how because we do so many loans a month, we get perks. So we deal with banks, their wholesale department, because we might give somebody, 20, 30, $100 million worth of loans. So that's what we can pass those savings on to you guys. And that's how we do it. And if you ever watch any of our videos that we do, sometimes we'll kind of pull the curtain back to show you how we get rates for each borrower. And it'll show you on there, it'll say Rocket Wholesale. It'll say XYB Bank Wholesale. It'll say 11 Mortgage Wholesale. They're all wholesalers that you don't have access to. So that's why we get much better rates than you guys do.
We should probably do that again. If you guys are interested in kind of seeing the back end side of how we actually look at rates with all these like 40 plus lenders, just like give us a little thumbs up or a yes in the chat. Give us a little thumbs up emoji or something. That way we can see if we can add that to our video list, because we've done a couple videos like that and I think people liked them, but we'll see if we do those again. Alden said, I hear a lot of people are saying 3% is unlikely, but what are the odds of hitting sub 5 in the near future? Wait. There we go. Okay. Sorry. Yeah, there we go. Yeah, I have to make sure you get the right.
I'm just messing. When you read this, are you talking like in the 4s? Is that what he's talking about, or hits the 5s?
I'm assuming sub 5. Yeah, like under 4.
Yeah, I don't think they're going to go to 4 anytime soon. I'll be giddy if they hit. I'm looking for a 5.9, and I think the market's going to open up quite a bit. 5.75 would be fantastic. I did a couple reports recently to show you guys how spreads work and everything like that. Mortgage rates. Check out today's video if you didn't. I just put it in this morning how the spreads are really affecting mortgage rates. Mortgage rates right now are kind of juiced about 75 basis points just for political risk, the deficit that we have, how much bonds are hitting the market today. Because at the beginning of the video, I don't know if for those that were here. The government today issued $42 billion of 10-year treasuries. Okay, so that's a lot of money out in to be purchased by investors. The sale went miserably. And so the rates right now are popping up a little bit. That's why the stock market's dropping and everything else, because of that. So I don't think we're going to be in the 4s probably ever again, maybe. We might teeter at 5, but we're going to have some more good or bad economic reports to hit those numbers. So I think we're going to be stagnant right now, about in the 6 to 6.5% range for a while, until more data comes in saying, okay, rates should be coming quite a bit down.
Nico's here. What's up, Nico? Right here. I'll say right in front of you.
Hey, I just talked to him yesterday. Hey, Nico.
Ontario said these Crash Bros have an army. Look at the comments under their videos. Yeah, there's
Dude,
quite a bit of a.
they're in. I mean, they're in it. You can't even. The bad thing is I try to go in there and explain to people that 2 plus 2 is 4. But they say, well, no, back in 2008 when the world crashed, 2 plus 2 is 9. I'm like, well, that's probably a bad analogy, but the data they use is bad. But people love just fear mongering. How about the guy that walks around Miami Beach just saying how bad it is? Yeah, this building is going to be foreclosed on. Our homeowners insurance, and he gets like 150,000 hits a day, and it's like, what did I learn? But I guess it's not learning. It's just maybe it's more entertainment than anything else. So I don't get it, but whatever.
Dan will never learn his lesson.
Yeah, it drives me nuts. It's like when I watch the news and you're like, they're lying to me, or you're watching a politician. It's like they're lying, and you're screaming at the top of your voice, and people are still saying, "Oh, I just love them. I just love them." It's like they're great. Whatever.
Belinda, I've never seen another Belinda, but my therapist's name is Belinda. So, anyway, hey guys,
I think you're fine. I'll answer the question. You're fine. I was reading it when the thumbnails were coming up. So go ahead.
Oh, you've got this one?
Yeah. It says, "Hi guys, I bank with Fidelity. Will it be okay for submission of my bank statements when I qualify for a mortgage? I do have a regular checking and savings account with them. So yeah, that's fine. The one thing when people do send us your statements, we do need all the pages. So if you're ever qualifying or trying to apply for a mortgage and somebody asks you for bank statements, please send all of them. But Belinda, you'll be perfectly fine. There's no problem with that."
Paul said, "I'm interested in buying a secondary home at the beach for personal use. Are there loans that would accept less than 10% down?" No. Secondary homes do start at
secondary homes with 15 or 20% down. You're going to need at least 20 to 25.
Secondary is 10.
Second homes?
Mm-hmm.
You ever price one out?
They're rough. I mean, pricing amounts rough.
Okay.
Yeah. Here's the Fannie Mae LTV chart. Secondary homes on a purchase are 90%.
Yeah, my bad. The rates are horrible.
Horrible.
It might exist, but the rate might be to the point where you can't do it. But we'd love to check for you if that's what you're looking for.
Yeah, I mean the LLPAs on a secondary home, let me see them real quick, are brutal. And this is when the LLPAs changed like a year ago. My perception of time is so shifted that it could have been like 6 months, but
well, there it is. Yeah.
Second homes. So based on your down payment, I don't even know. This must be if it has like a secondary on it or something. So yeah, for 90%, so 10% here, secondary, you're looking at a 4.15% adjustment, which is going to be close to about, basically divide it in half is probably going to be a rough estimate of the change in rate. So around 2% higher than what a normal rate would be. And of course, the more you put down, the slightly lower that's going to be. So those are real rough. Basically, it seems like Fannie and Freddie were just like, we don't want to be in that market anymore. Which is tough because there aren't alternatives. You can't get any sort of government loan as a secondary home. Okay.
Did Rojito put a question we missed? My question.
You see. Refinance. When will be a good choice for me to lower my monthly payment? My 30-year fixed rate is never. You will not want to refinance for a long time.
Yeah, I'm just kidding. So, Rojito, is it a joke or we're kind of? I would love to answer your question if there's kind of a question there, or if you're just kind of saying my rate's 3.6, ha ha. Well, my rate's 2.625, so I beat you.
We're not going to get close to that point in a long time. You have a wonderful rate. that I would not be upset about. Even for me, my rate is Dan. Close your ears. Cover your ears. My rate is okay. Let's your eyes. You listen with your ears.
You almost continued with the question. I gotta go ahead.
It's my rate is a 4.875, and I often think, man, I wish I had a 3 something, but also it's still fantastic compared to what I could get right now. So you have a wonderful rate, and I don't imagine you're going to have a refinance opportunity in a long time, which is, I think you're in a great spot. That guy Rye, what's up? Instead of putting an emoji that it puts in the description, so it just says lemon character and baby lemon blowing a party horn while marching. So,
dude, you got to put the thumbnail or whatever, the emoji up there. We always liked your emojis.
Oh, when he did
my guy Ray,
the little crystal ball thing. I had to figure out what that was called. Jade said, I'll be emailing or calling in. Awesome. Ali said, I have a 7.47 rate and qualified for a 6.125 on a 30-year fixed, no costs. Is it a good time now?
Please be careful with the no costs. I hear no cost every time I talk to somebody, and then by the time I get the loan estimate in or whatever, there are fees. But if you're getting 6.125, I don't know the parameters. I don't know, what your loan to value is, what your credit score is, what anything is. Please email me. Give me the scenario. I need to know what the value of the home is. And anybody out there, if you want to get an idea what you're going to refinance out, let me know what your credit score is. Let me know what the value of your home is. Not here, email it to me, and what your balance is. And I'll send you back an idea what that rate would be and a payment. And so just shoot me an email if you guys want. Give me within 24 hours, I'll have it back to you.
Jackson said you guys refinance second mortgages. So we, not on their own. We can basically take your first and second and refinance it into one mortgage, which that might be something you want to look at doing. But are you aware of any lenders that will just refi a second?
Some will. Just go to your, if you're looking for that, go to your community bank, something local. They might be able to help you out.
Novus, I think I put this up here, but we didn't get to answer it yet. Yeah, I have an interesting question. I want to live outside the country and would rather sell than rent my home and then buy it again when I come back. Would it be a smarter move to rent out instead? If you're going to be out of the country, someone then is going to have to take care of that rental for you. And so maybe before you make a decision on that, I would maybe put out some feelers for some property managers and seeing how much that would cost, because you're going to need somebody to take care of this property for you. You could maybe rely on like family or some local like handyman type people. I would try to maybe leave it up to maybe a more professional company who's used to managing rentals to take care of that for you. But just keep in mind, if there are issues, you're going to be outside the country, and it may be difficult for you to come back and fix them if you're doing them yourself. And just the other thing too is just the cost consideration. Rentals can be a great way to build wealth, but also things can happen. Like a tenant can trash the property, and now that all of a sudden maybe wasn't as good of an investment as it seems on paper. So it comes with risks with renting. And so unless I think you're fully committed to renting and wanting to do that long term, then I would maybe wait till you're back.
I'd like to find out how long he's going to be gone, because if it's a year, maybe not even rent it or whatever. And I'm not saying that. Here's why I'm saying this. If you sell it, you're going to probably have to sell. You're going to have costs. You're probably going to have to pay a realtor. You're going to have to pay title fees. You're going to have to pay transfer taxes. You're going to have it might cost you $5,000-$10,000. Well, probably more than that. It's probably going to cost you $10,000 or $20,000 to sell it. And then when you come back, you're going to have to pay all this stuff again. So, what is the break-even point of you selling it or renting it, or what time duration do you have? That's what I would look at. Because your closing cost between the buy and the sell, you're probably going to look at $15,000, $20,000 in costs.
Yes. Mayab said, what are your emails, website, phone numbers? What states don't you live in? Give it all to us.
I guess that would probably be a good idea.
So here, I'll put, it's hard for me to type and talk at the same time, but it is a superpower that I have. All right, I put our emails here in the chat. I'll put our office phone number in here as well. I will say for calling, the easiest way is instead of playing phone tag, sometimes the easiest way really is to schedule a call with us. So if you go to whenthehouseyoulove.com and click get pre-qualified, you'll answer a couple questions and then you'll see our calendar. So that's going to be the easiest thing because you can get right on our calendar and, again, it's not phone tag back and forth. That's the best option. And then Dan's website is therateupdate.com. So Dan and I both work together. We just have kind of two different brands on YouTube. So Dan's channel is The Rate Update with Dan Frio, but we both work on the same team under ServBank. So again, we just kind of have two different little online brands, and then we joined forces. And then Gio, I did get your email. I'll take a look at that, and I'll definitely block your info out. No worries there. Was there something else? Oh, we also work in all 50 states. So that is a nice little benefit that we have here. Daniel said, I'm working on getting pre-approved. I was quoted $8,000 on lender expenses and $3.5 on title. Is that a good quote? $8,000 on lender expenses is crazy. Yeah, I would put that furthest away from a good quote. Daniel, what would be best? Shoot. I put Dan's email here in the chat. Send your quote to Dan, and then he can take a look at it and see what we can offer that should be better for you, because $8,000 is rough on lender expenses.
Yep.
Rotio said, thanks a lot. It was not a joke. I'm trying to lower my monthly payment. I get it. Yeah. And we're not making fun of you. It's just a jerk. Yeah.
Somebody sent me a nasty email, or I think they posted it on one of my YouTube videos saying that how we were complete jerks when he asked a question and this and that. And it was kind of like this. So guys, we're not here to offend you. Sometimes we just kid at it or kind of jokingly go through some things, but we're truly here to help you. And that's the whole point of it. So please don't take any of this personally or seriously. When somebody asks, how do I get a lower payment when my rate's 3? It's hard. It's like, I don't know, don't escrow your taxes and insurance. You're going to have to pay it eventually, but it'll drop down your payment. But there's not too much you can do if you have a 3% interest rate.
Are you able to buy points on an FHA loan? You 100% can. Thank you guys for extending this session by 30 minutes. Absolutely. Yeah, we are a little bit over what we normally do. Each word of advice that comes from you is gold. Oh, thanks. I appreciate it. And it's just, you're just talking about me, right? Not Dan. Cause I lost our two little question
I'll close
battles.
My ears again. I'll close my ears again.
Daniel said,
close my ears again.
So just make a video about paying extra payment to get rid of your PMI versus putting money for a remodel and get equity. Interesting. That could be interesting. It's hard with those scenarios because, with paying down your balance to lower PMI is straightforward math that never changes. But going into a remodel and increasing your equity is tough because there's so many variables in there. But that may be a good scenario to cover so people can be aware of. Dan, you want to take this? I normally do these, but you want to give us a walkthrough of how people can take a next step?
Absolutely.
Here?
So if you're looking to possibly kick the tires to see if you can get pre-qualified to buy a house or maybe your second home or an investment property people are asking about. But what we're hearing today is people there might be opportunities for you to refinance. So instead of disqualifying yourself, reach out to us. We'd love to help. So what you do is you just go to whenthehouseyoulove.com and you can put in and schedule an appointment. What happens, we do things a little bit different because most of the times, like if I go to a website, I don't want to put in all this information, spend 20 minutes of my time getting to the end and it's like, oh, that didn't work or whatever. So what we do do is we give you an option. We're saying, okay, here's, you can put in your application, but also schedule an appointment with us. Let us know your story. What are you trying to do? What's your goals? And we're here to help you. That's what we do. And we can coach you through the process. And what we want to do is we want to be your partner, basically from the day of application to the day you get your keys in your hands. We have services like we can help vet realtors in the area that you're looking to buy. You might not know a realtor. So you're like, Dan, can you help me there? Yes, we can help you there. You might have some questions about, credit scores and things like that. So please check us out. Go to the winthehouseyoulove.com, schedule an appointment, put in your application there. We'd love to help you. So that's it for this week, guys. Thank you for joining us. We'll be back next week. And good call on this week, Kyle, when you mentioned, let's talk about refinances, because I think there's a bigger need out there than we actually thought. So thanks for joining us this week, folks.
All right. We'll see you all next week, same time, same place, 3:30 Eastern on both my channel and Dan's, and we'll see you all there.
Take care. Have a great evening.